delightfully different. Not for sale to persons under 18.
A very good morning. Welcome to Financial Markets. And we are back as of today to give you updates on financial markets in East Africa and Africa, as well as the entire globe. A lot has been happening ever since yesterday, and we've seen a lot of activity on the markets as they closed and as they opened as of today. So we're yet to go deeper into insights that are yet to value your investment and decision making. So it is Victor Chiberu and
Nampija Gloria.
So diving right into the Uganda Securities Exchange, we have so many updates coming in from that end. We saw a lot of company activity. We have seen shares being exchanged, and we're looking at turnover as well as highest trading volumes switching from entity to entity. So we are yet to go deeper and understand what was causing these percentages and how investors are to go about making the right decision. So Gloria, any updates from the Uganda Securities Exchange?
Indeed, Victor, there is really a lot to unpack today, starting by looking at the trading summary of Monday, November 27th, 2023. The data actually shows a 43% decline in volume, but a significant 340% improvement in turnover compared with the previous trading day. So in your opinion, Victor, what factors could you think could be contributing to this?
Well, it is an intriguing scenario, and the decline in volume might actually suggest reduced activity or perhaps a cautious approach from investors. But on the flip side, the substantial improvement in turnover could actually be attributed to higher value transactions. And in this case, we are looking at an indication of a focus on quality over quantity in the trading activities.
Indeed, and actually an interesting perspective there. And looking into the specific equities, we see a mix of gainers and losers. Stanbic Bank Uganda led the gainers with a 1.72% share price appreciation. And I'm looking forward to understand what could be driving these positive movements coming from Stanbic Bank.
Well, as we speak, Stanbic Bank's uptick could actually be influenced by various factors, but in this case, we're looking at financial reports and mainly strategic initiatives and the broader economic indicators. So investors might be reacting favorably to the bank's performance, and of course, this has to lead to an increase in their share prices.
Indeed, and conversely, KCB Group experienced a 2.05% share price depreciation, making it actually the biggest loser on yesterday's trading session. What could you think could be contributing to this market dynamics coming from KCB?
So KCB's decline also could be linked to sector-specific challenges and broader economic trends playing in this case as well. But banking stocks are often sensitive to interest rates and economic stability, and as well as regulatory challenges. So a closer look at recent developments within the banking industry and the macroeconomic landscape could improve insights into KCB's performance. But not to forget, Umeme also recorded the highest volume of traded shares, and they were standing at around 148,298. So looking at this figure, Gloria, what does this high volume indicate about investors' new interest in Umeme?
Well, looking at Umeme and his high trading volume, it actually suggests active investor interest and liquidity in the stock itself. So these investors might be reacting to the recent news from Umeme and the earnings reports, or maybe there are changes in its regulatory environment. So it's also crucial to know the specifics and also the drivers behind the heightened interest as to understand the dynamics at play.
So looking at the market indices, the Uganda Securities All-Share Index experienced a slight decline, while the local company index also saw an increase. But the all-share index slide, of course, in this case, might reflect the mixed performance of the equities listed on the exchange. And on the other hand, the positive movement of the local company index, of course, indicates strength in local company stocks, and investors seem to be favoring local companies, possibly due to the perceived stability or growth potential in this segment. segment.
Indeed, Victor, and the overall, actually, the USE has seen the all-share index has seen a 1-week gain and a 4-week loss, and an overall a year-to-date loss. So these mixed market trends of the all-share index could actually be influenced by global economic conditions, geopolitical events, or even sector-specific dynamics. So investors are likely reacting to a combination of local and international factors that impact the overall market segment at large.
And before we shift to the list highlights on the indices, why don't we look into one of the equities that showed some remarkable participation in yesterday's market?
Exactly, and diving up straight up, we have Uganda Clays. I haven't seen Uganda Clays around actually, but it has some really good details here and is a key player in construction and housing industry. So Uganda Clays is a significant contributor to the construction sector in Uganda. It's also fascinating to see how they have maintained their position as the 18th most valuable stock on the Uganda Securities Exchange.
Absolutely, and let's start by explaining the Uganda Clays core business. The company actually specializes in the production and sale of roofing tiles, walling, and other construction materials. So their commitment to quality and dedicated labor force sets them apart. And this, of course, is allowing them to competitively price their products.
Exactly, and being listed on the USE since January 18th, 2000, Uganda Clays has certainly been a long-standing player, and it's actually traded under the ticker symbol of UCL, and its international securities identification number is around UG under 000014. So it currently holds a market capitalization of 11.7 billion Ugandan shillings, representing about 0.072% of the USE equity market.
That's interesting. And looking at the recent trading data, Uganda Clays actually closed at 13 Ugandan shillings per share, and that is as of yesterday. This was recording a 0.78% gain. And looking at all these digits, how significant is the movement, and what factors could be at play, really?
Well, looking at the 0.78% gain, which is actually a modest yet positive movement for Uganda Clays, it actually indicates some investor confidence or maybe positive sentiment towards the stock itself. So factors contributing to this could actually include company announcement, maybe sector trends, and the broader economic indicators.
So it is noteworthy that the Uganda Clays entity began the year at 17.20 Ugandan shillings per share and has since experienced a 24.4% loss since then. But looking at what could be possibly behind this year-to-date performance, and we're looking at it reflecting a decline in the share price over the course of the year, and several factors are in play, such as changes in construction industry and the economic conditions, as well as company-specific challenges. But of course, we need to dig deeper into their financial reports and market dynamics for a comprehensive understanding.
And in terms of trading, Uganda Clays is actually the 7th most traded stock on the USE over the past 3 months, and it has traded around 157,108 shares, valued at around 2.1 million Ugandan shillings over the past 3 months. So this is actually averaging to around 2,494 traded shares per session, and a notable peak in volume occurred on October 19th, reaching around 87,700 shares traded, and this actually suggests a level of liquidity and investor interest in Uganda Clays within this period.
So looking at the broader market context, Uganda Clays stock performance actually shows a decline of 4.55% in the past week and 24.4% year to date. So what implications does this have on investors, really?
Well, Victor, the recent decline could be a short-term market reaction or maybe specific challenges going on in the industry itself, and investors also need to consider both short-term and long-term fluctuations of these various market trends. So it's actually crucial to access the company's fundamentals, the upcoming projects, and strategic moves that could influence this trajectory.
Well, given the position in the construction sector, there are indeed specific industry trends and economic factors investors should keep an eye. So we're looking at construction sector trends, infrastructure, projects and government policies related to the industry, and of course they can significantly impact Uganda clays. And additionally, monitoring raw material costs and labor market conditions, as well as overall economic stability, will provide valuable insights for investors.
Indeed. And to sum it up, what could be your key takeaways for investors interested in Uganda clays?
Well, investors should conduct a thorough analysis on Uganda Clay's financial health, upcoming projects, as well as the broader economic landscape. Because while short-term fluctuations are inevitable, a focus on the company's long-term potential and industry trends, as well as market dynamics, will help make really informed investment decisions.
Indeed, thank you for those insights, Victor. But then moving on to the Nairobi Securities Exchange, the rest of East Africa, we are immersing ourselves in the dynamics of the Nairobi Stock Exchange, dissecting the trading data from Monday, November 27th, 2023. And it's actually always intriguing to dive into the numbers and understand the pulse of the market. So let's start with the overview of the trading summary.
Well, on Monday, a total of 8,636,800 shares were traded on the Nairobi Securities Exchange in 977 deals. So this was amounting to a market value of 87,242,193. So compared to the previous trading day, we actually witnessed a 47% improvement in volume, a 19% decline in turnover, but a notable 17% improvement in the number of deals. So the current market capitalization of the Nairobi Securities Exchange actually stands at 1.43 trillion Kenyan shillings. Interesting
dynamics, Victor. And it's actually noteworthy that 45 NSE listed equities participated in trading, ending with around 16 gainers and 22 losers. So Standard Group led the gainers with an impressive 9.07% share price appreciation. So in your opinion and in your expertise, what do you think could be driving this substantial improvement?
Standard Group's significant gain could be attributed to various factors. So in this case, you're looking at positive news, a strong financial performance, and a market sentiment favoring the media and communications stocks. So investors might be reacting to specific events or anticipating positive developments within the company.
Interesting. And on the other side, we have Eagers that experienced a substantial 9.23% price depreciation, making it the biggest loser on the market. And I'm wondering what could have led to these challenges in the dynamics of this market at large.
So IGAD's decline is influenced by sector challenges and agricultural market challenges, but of course not leaving out company-specific issues. So agricultural stocks are often sensitive to factors like weather patterns, commodity prices, and regulatory challenges. A deeper analysis within the agricultural sector, in this case, and IGAD's financial health would provide more valuable insights on that matter.
Indeed, and Safaricom recorded the highest traded shares with around 2.72 million. So this high trading volume of Safaricom actually suggests active investor interest and liquidity in the stock itself. Safaricom is a heavyweight in Kenya's market, and such high volumes could be attributed to its status as a key player in the telecommunication sector. So investors might be reacting to these recent company news, developments in the industry, or the broader economic factors.
Looking at the market indices, the benchmark, the all-share index, the Nairobi Securities Exchange all-share index declined by 1.12%, closing at 91.21. And how significant is this movement? Because we want to know what broader market trends could be influencing it.
Well, looking in the decline of this Nairobi all-share index, it actually indicates a bearish sentiment in the market on Monday. It's actually crucial to examine the underlying factors contributing to this decline. It could be the global economic conditions, could be geopolitical events, or even sector-specific challenges that could be influencing the overall market sentiment.
So despite the all-share index decline, other indices like the 10-share index, the 20-share index showed gains in the past week. And the 20-share index, as well as the 10-share index, might be influenced by specific factors or industries outperforming others. So it is common to see variations in index movements reflecting the diverse nature of the equities listed on the Nairobi Securities Exchange. So investors should explore the specific drivers behind these index movements for a comprehensive understanding.
Indeed, and the overall, the NSE experienced a year-to-date loss of 28.45%. So Victor, according to your analytical knowledge, how do you interpret the context of the broader economic trends coming to this year-to-date performance?
Well, the year-to-date loss could be influenced by a combination of factors, including global economic uncertainties and inflationary pressures, as well as country-specific challenges. But investors should consider the broader economic landscape and monitor developments in key sectors to actually navigate the market effectively.
Interesting, Victor. So investors should actually also stay vigilant, keeping an eye out for these company-specific news, the sector trends, and the global economic conditions. As we all know, diversification is and understanding the factors driving individual equity movements on the market will be crucial in making informed investor decisions. It's me, Gloria, together with Victor. We'll be back with more information concerning Kenya, the rest of Africa at large. Thank you.
Smart